Good morning, everybody. Our apologies for the slightly late start. There's just a bit of a late influx of people into the webinar that we just wanted to allow some time to register. Just by way of introduction, before we get kick-started into the content, my name is Shay Carbis. I'm the Regional Commercial Director for Global Reviews and responsible for our financial services sector. Karen Bannon, our Principal Client Advisor, will be walking us through the research today on how consumers are making some decisions when looking for retail financial services products and some of the tips and tricks behind some of the strategies out there by particular retail brands. You might notice that in some cases there are some brands that might not be represented in the data. Don't be alarmed, we're actually going into field as of now, in fact, over the next quarter. So if you're interested in having your brand represented in the Global Reviews Digital Effectiveness Program, just reach out to us at the end of the session and we can look at discussing how we might be able to do that. So without sort of delaying the content any further, because there's quite a bit to get through, I'd like to hand over to Karen Bannon. Thanks, Karen.
Thanks, Shay, and thank you all for joining us this morning for our webinar. We've got a lot to cover, as Shay said, in this 45 minutes, so I will keep a pretty brisk pace. I won't go through every little detail and every little slide that I'll show you, but you will get a copy of it after this session so you can have a look in your own time. So today we're looking at financial services, and the theme we've got is the good, the bad and the opportunities. And what you're going to see today is, where your brand sits in comparison to other brands in the industry in terms of the customer experience that you provide. We've looked at a number of different industries within financial services, so you'll see results from mortgages, credit cards, savings and personal loans, as well as transaction accounts. And we'll show you a bunch of charts that shows kind of leaderboard tables, as well as real-life examples from screenshots of different websites as to how customers found the experience on your website, which contributes to overall scores. So we'll look at both the good and the bad, and that falls out to a number of opportunities. We've got 6 different opportunities to cover off today, and the opportunities may not necessarily be new to you. So you might have already heard of them before or got them in planning. Perhaps you're even working on some of them now. But what I do hope is new for you today and what you'll get out of this session is perhaps a different way of looking at those strategies and tactics that you're undertaking and the opportunities we'll provide. So it might be a different priority level based on what you see today of the importance of different areas, or it might be a slight tweak to what you're doing to really maximise the potential to create a better customer experience. So let's get started. The agenda for the next 45 minutes, I'll touch on briefly who Global Reviews are. I'll look at our research methodology at a real high level for you, and then we'll look at the industry, the overall industry results. The majority of our session today will be on insights and opportunities for you that are a result of those overall scores. And then at the end, hopefully we'll have some time for some questions, but if we don't get to your question, definitely feel free to get in touch with us afterwards and we'll aim to answer the questions for you. So about Global Reviews, for those of you who don't know us, we are a digital consumer analytics and competitor intelligence provider. We operate across Australia, New Zealand, UK, Ireland and the European markets. So the benefit for our customers is that they're able to see not only the local performance, but also see best practice and comparative performances globally as well. We were founded in 2000, so a wealth of historical data that we can plot trends on, and also some of the companies that we work with are shown below in those logos there. You can see the good representation of financial services in Australia, also overseas, and also other industries as well. So it allows us to, again, look at a broader kind of look at different customer experiences into other industries and think about how we can translate that into your own brand. So a little bit more about what we actually do. So we focus on driving insights for growth. We focus on competitor customer experience research. So it's a little bit different to other research companies in that we really focus on not just you and your website and your experience, but how that actually compares to competitors. Because in reality, that's what customers are doing when they shop for products. They're not only looking at your website, they're looking at others as well. So we're able to provide you insights for growth that you don't normally see. We know that it's really easy when day to day to just focus on your own website measurement and your own website benchmarking, but we're able to show you those from competitors. So we look at measurement strategies, benchmarking and ongoing optimisation of the digital customer experience, and we focus on resulting in higher conversions of prospects to the consideration and the purchase. So it's not just about a bunch of numbers, we're always bringing it back to how we can get more conversions for you. Firstly into the consideration set so that your brand is even considered, and then finally converting those people through to actually purchasing from your brand. So what this enables you to understand is who is winning customers in your market for your product and service, but more importantly, why. What is it about what they are doing compared to what you're doing that's really getting that cut through to win that customer? We also look at how easy it is to buy from you, and again contrast that to your competitors. Is it easier or harder to buy from your competitors? And then finally, we break it down into actions that you should take to drive sustainable improvements. So it's really about understanding. We know, it's very challenging when you've got limited resources, limited time to know what to work on first. And so what we aim to do is to really tell you what's going to give you the bang for the buck in terms of areas to focus on to get the biggest sustainable improvements. So that's kind of it in a nutshell about global reviews. If you want to know any more detail, we can certainly let you know after this session. So let's now have a look at our research methodology. We take a customer journey-based approach to measuring the customer experience, and we break that down into 4 different phases. We've got discover, consider, act and relate. And then within those different phases, we've got different products. First of all, we've got the digital marketing effectiveness, which encompasses discover and consider. And we abbreviate that because it's quite a mouthful if you keep saying that all the time, to the DME, and that's what I'll call it from this point on. So firstly, in the discover, if I can take savings as an example, it's as if someone wakes up one day and decides they want a savings account. We want to know how they go about discovering your brands, and not only about your brand but your competitor's brand. So are they winning your prospective customers? If so, why? And which competitors are taking customers away from you? Also, how strong is that attraction to that competitor, and what are they doing to build that attraction? Once the customer decides that you're a brand worth having a look at, they move into the consider phase, and this is essentially when they land on your website. Now this particular phase overlaps between the DME and what we call the DSE, the digital sales effectiveness, and it's focused, as I said, when they land on your website. So what we want to know at this point in time is, do competitors engage customers and help them match a product or service to their needs better than you? So essentially, what type of journeys are offered, what type of tools and content is available on your website to be able to help that customer discover what you have to offer and consider it. So that's what we're going to focus on today, those 2 phases. I'll talk now a little bit about the inputs to our research for each of the DSE and the DME products. So starting off with customer behaviour. So what we do for the DME is we get a sample size of around 200 customers who are in market for your particular product within the near future. So taking savings accounts again as an example, they're customers who are willing to buy or looking for a savings account in the near future. So 200 of those customers are recruited, and then we give them a task, and the task is quite what we call an open task, where we say to them, go and find a savings account for your needs, essentially. And then we start them on a blank screen. So we don't direct them to any website, we don't direct them to any search engines or anything like that. We just want to see that natural behaviour. Now for the DSE, it's a closed task, and what that means is we send people to specific websites. So they're smaller sample sizes. We send about 20 to 50 people to a number of different websites, and we ask them to complete typical tasks that they would to find a savings account. So it might be go and find a savings account to suit your needs, find a high interest savings account, that type of thing. And the reason we do that in a closed fashion is because it allows us to compare and contrast the performance and the usability of each website using the same tasks. So that's customer behaviour. Customer attitude, this is really important because not only do we do the usability kind of testing and tasks that I spoke about just a second ago, but we also overlay this with the customer attitude, and we do this in both cases for the DME and DSE, pre-task and post-task. And the reason we do it pre-task is so we understand their attitudes and preferences, and post-task so we can see if their preferences changed, if the website lived up to expectations, that type of thing, and a number of different questions that we ask. Next up we have the customer audit, and what we do, this is just for the DSE, so the website testing. We do this by by showing customers different parts of a website and asking them specific targeted questions about it, or audit questions. So for example, we might show them a comparison table and say, does this look like it would be easier to compare products? And we do that across all of the different websites, so your own and competitors, and compare and contrast the results. Last up, we have a best practice audit, and this is undertaken by Global Reviews. It's an audit that we've built over our 15 years in market, and it is essentially a checklist of what you need to have on your website, both in terms of features and functions, to offer a good customer experience. So that's kind of the research inputs and the research in a nutshell. I don't want to turn this into a methodology session, so I'll stop there on our methodology, but certainly any questions come back to us after this session. So let's get into the overall results. So where your brand sits and where competitor brand sits. So what we've got here is a financial services industry performance overall chart, and we have rolled up the scores from both the DME and the DSE across multiple industries, across mortgages, savings, credit cards, transaction accounts and personal loans, where those brands have those products. And by combining these together, we can get a kind of view as to what brands are performing well and providing a good customer experience. So in the blue, we've got the overall DSE score. Now that's a score between 0 and 100. And then we've got the DME in the red bar there. Now the DME final preference is the key question that we ask at the end of that blank screen task. So when customers go out to find a savings product, for example, at the end of the task, we ask them what brand is your final preference at this particular point in time, and that's the final preference that I've shown in that red bar there. So it's essentially a score between 1 and 100, split up across all of the brands in the industry. So when you combine those together, ING Direct tops the table, NAB comes second, followed by a really close top 8 there, ANZ, CBA, all the way through to Bank of Melbourne and Westpac, and then we see a little bit of a drop-off in performance from Suncorp down to HSBC there, and then right at the bottom of the table we've got Aussie. Now just a note on Aussie, so that's essentially in the mortgages area here and savings. The reason why that score is a little bit lower, I suppose, is because part of their process actually involves offline contacts and offline information, whereas our DSE and DME are focused on online. So as a result, the DSE score is a little bit lower there. So that kind of gives you an overall view of where your brand and other brands sit in the overall market. So it's kind of the really rolled up high level view. Now I'm going to go into each of the industries to see who's winning in each of the separate industries. So we'll start off, I'm just showing the top 5 by industry because otherwise it would just be a complete complex view of charts. So mortgages top 5, ING Direct are topping the table there with a strong performance. Same sort of colour codes we've got here, DSE in the blue, DME in the red. Followed by St George, CBA, ANZ and Ubank. Ubank and CBA have strongest performances in DME, you'll see there. Into credit card top 5, we've got CBA topping the table, so a good solid performance in DME, making up for a weaker performance in DSE, through to Westpac, ANZ, NAB and St George. And you can see here that the scores are a little bit higher in credit cards compared to mortgages. So as an industry, mortgages is kind of struggling a little bit. Savings accounts, we've got a strong player, strong performance by ING here, and then a close race for the next 4 positions there between ANZ, St George, ANZ, Westpac, St George and NAB. Next up is transactions accounts, and NAB have really dominated in this space when you combine those scores there between DSE and DME, and again similar to savings in that the next 4 are quite similar scores. And last up we have personal loans top 5. Now we didn't do a DME for personal loans, so we haven't got those results added to this area, but we've got the DSE as you can see there with Westpac topping the table, followed by ANZ, St George, CBA and Citibank. So that's kind of, in a nutshell, I guess, the overall performance of where each brand sits. So what we're going to do beyond this point is really start to look at some examples and start analysing some data to understand what has led to those particular leaderboard tables. And that really forms our results and opportunities for today. So we're going to start off with the discover phase, which is our DME product, and essentially when customers are looking for brands and that offer their products. So before we do that, let's step into the customer mindset. And in one of our pre-task questions, we ask them how long do they spend researching. So when looking for new financial services products, consumers say they will spend 3 to 4 hours, over 4 to 5 days, considering 4 to 5 brands. Now that's when they're looking for a new savings account, transaction account or credit card. When they're looking for mortgages, it's 8 to 10 hours over 2 weeks, considering 4 to 5 brands. So I guess what's really interesting here, and something we have to embrace and not forget about, is it's a competitive environment. So brands, the 4 or 5 brands will be considered over a long kind of period of time, regardless of what product they're looking for. So it's really important to know that even if a customer has a fantastic experience on your website, they find what they're after, they're going to go and leave. They're most likely to go and leave and compete with someone else. So it's really important that we have our offerings made really clear and also our products really clear so they understand why they need to choose us as they leave and go and compare on other websites. So that kind of really filters into our analysis, I suppose, of how we can improve that website. So what's really exciting about the DME product is we can overlay what customers have in mind before they actually undertake their online research. So that's kind of something that we wouldn't necessarily get if we were just looking straight up in analytics or other results of data that you have. So what we found, and this is looking in the savings account area just for an example here, we found that 97% of people, before they start looking, actually have an initial preference, and 76% of those are current customers. Now, when we take that little group, that segment of people who preferred the big 4 there, so the NAB, CBA, Westpac and ANZ, we can follow their journey and see what they do. And what's really interesting is even though they have a current preference, even though they're loyal to their current bank, 86% will still go off and use search. And 80% of people won't even enter the preferred brand name into the search engine. So kind of knowingly or unknowingly, at this point in time, they're exposed to a wealth of other options. From this point in time, only 51% will actually end up visiting the preferred brand's website, and 37% will choose another brand as their final preference. So it gives you a real snapshot as to what's happening in this DME, and I guess depending on where you sit, the good or the bad experience, the good or the bad from here. So the good being, if you are a challenger brand, there's a good opportunity to get your product in front of those that already have existing strong preferences, and the bad is, you know, if you've got a strong preference and you've got those customers who are current, how on earth do you track them when you've only got 51% that are coming back to your website? So we'll have a look at some opportunities to address those issues and those challenges that we're faced with this customer behaviour as we go forward. But before we do that, I just want to break down each of these different areas into a little bit more detail so we can understand what's happening. So we'll look at initial preference next. So we know that most will prefer their current financial provider, and what we've got here is a chart that shows which company would the customer initially prefer before conducting their research, and we've aggregated this based on different products, so mortgages in the blue, savings in the red, transactions in the green and credit card in the purple there. And when we do that, we can see that CBA is the strongest brand that is initially preferred, followed by NAB, ANZ and Westpac, and then we kind of drop off a little bit. ING Direct and Bankwest, St George a little bit strong, and then there's a wealth of other brands that fall below in terms of the initial preference. So the good news is some brands are getting what I'd call a head start at winning a customer. So you've got them in mind before you even get started. So now we have to work hard to retain this initial preference. The opportunity is for everyone else who really need to use strategies to attract customers that already have that existing preference. So now let's have a look at search. So we know a lot of people went to search. Let's see what they were doing in that particular space. So what we've done here is we've looked at the search terms by type, the top 3 search phases and the top 3 sites visited from search, just to give you a flavour as to what's happening, and we've split that up by industry. So if we just have a look at mortgages here, we can see that there's a strong type of search around general terms, followed by brand, not so much in the comparison. When we go across to the search phrases that are used, it's interesting, even though it's not comparison terms people are entering, they're actually going through looking at brokers, which I suppose is a bit of a pseudo-comparison in itself. Also Aussie Home Loans, another broker, a mortgage choice. And the sites visited is a bit reflective of those search terms. However, CBA have managed to jump onto the top 3 sites visited, so they're doing something good in search to attract those visits. Looking down to savings, it's a little bit of a flip, I suppose, in terms of brand being the most popular type of search term that's entered as an overall type. A little bit more comparison and a little bit less general terms. When we look at the phrases, we can see savings accounts is the #1 most popular phrase, followed by Commonwealth Bank and ANZ. And then when we look at the sites visited, it's interesting that InfoChoice is the top site visited, probably a result of that savings account general term, followed by the brands that happen to be the second and third most popular phrases, Commonwealth Bank and ANZ. Into transactions, the strongest use of brand type terms and the weakest of comparison terms that we see in all of the industries there. Transaction accounts being the most popular phrase, followed by ANZ and Westpac, and then when we go across to the sites visited, CommBank tops the table there, so doing very well considering they weren't in the top 3 search phases, InfoChoice and CanStar, which is a really interesting result when you consider that people aren't typing in comparison terms, but yet they're going to comparison type sites. So it's just a demonstration of when customers enter those general terms, they go to what attracts them at that particular point in time, which is to compare the market. And looking at credit cards, the strongest use of comparison terms. So when people are shopping for a credit card, they're more likely to think comparison straight off the bat. And as a result, the top search phrase is credit card comparison, followed by general term credit card, then ANZ. And into the sites visited, a couple of comparison sites there. And Commonwealth Bank, again, jumping onto the top 3 sites from search. So what does all this mean? The good news for CBA is they're doing really well. So they're really translating that initial preference that we saw on that on that previous screen there, the top of the table, they're translating that into search phrases and also, more importantly, search visits. So they're doing something good in search. The bad news would be NAB, I would say. They were the second most preferred brand, a close kind of second behind CBA there, but they're missing from not only the top 3 search phrases, but kind of more importantly the top 3 sites visited. So they're kind of losing ground in this area. And I think the opportunity here is InfoChoice is strongly represented. So brands really must capitalise on this consumer appetite for comparison. So that gives you a snapshot as to what's happening in search. Now I want to move on to the next phase of the journey, which is around the movement of consumer preferences. So what this chart shows us is the average performance across the mortgages, savings, credit card and transaction accounts of the initial preferences, so people who had that brand in mind before they undertook the research, and then after they completed the research, what was their final preference. And it's always really interesting to put the data side by side like this so we can see who is winning and losing ground in terms of customer preferences. And we've got a few good stories here in terms of some brands are gaining significantly more preferences after the task. So starting off with to an extent NAB, who's topping the table, they've made some ground in gaining preferences, but to a bigger extent ING Direct, Bankwest, UBank, they're more than doubling their initial preference to their final preference. So UBank, it's over 300% really improvement. So they're doing some really great things. If we want to look at the bad, so CBA, who did so well with the initial preference and so well with getting that search traffic and visits, they didn't manage to get any increase of preferences. So a bit of a bad news story there, I would say. So what I'm going to do now is I'm going to focus on CBA and ING Direct and kind of show you what they're doing differently to potentially have this particular result. So let's have a look at ING Direct. So another exciting thing we can do with the DME data is we can segment different preferences. So you can actually learn who is stealing customers from you or who you're winning customers from. And in this case, I've got a chart that shows the initial preferences of those people who ended up choosing ING Direct. So basically, who is ING Direct stealing customers from? It's an example from savings accounts, and we can see that initially they're doing really well to capture people who have no preference. So 43% of the people who ended up choosing ING Direct actually didn't have any preference when they started. The next most popular, they actually had ING Direct in mind, but then we can see for a third of the customers that ended up choosing them, they actually stole them away or tempted them away from other brands. So CBA, NAB, ANZ, etc. The other really interesting stat is when you look at the kind of reverse of the people who initially preferred ING Direct, how many of them were able to retain? Well, they only lost 23%. That's the number down the bottom there. So a pretty good performance overall. Let's compare and contrast that to CBA and see how they went. So same data, completely different chart here. So the initial preferences of those who ended up choosing CBA, so a similar result in terms of those that had no preference, but then you can see the majority actually preferred CBA, and they managed to steal a few customers off Suncorp. The other really interesting chart is when we reverse that and we look at those who originally preferred CBA, over half, 55%, actually ended up choosing another brand. So there's some work that needs to be done, I suppose, to really capitalise on that head start that CBA had. So ING Direct are managing to win over both customers with initial preferences, those without a preference, as well as retain more of those who initially preferred their brand. So let's have a look at what they're doing, and more along the lines of why. Why are they preferring ING Direct over CBA? So what we've done here is at the end of the journey when they've discovered or decided on their preferred brand, we ask them why. Why did you prefer that brand? And what I've done in this slide here is split the data for those who chose ING Direct and those who chose CBA. And it paints a really interesting picture. So we've grouped the options up into different themes. So we've got product attributes, brand relationship and website features. And what becomes really clear and really apparent is ING Direct are winning in product attributes. So they've got good interest rates and options is the clear winner as to why people are choosing ING Direct, or a clear reason to potentially switch providers or preferences. And CBA are winning the brand relationships, so I have used them before and I trust this company are the main reasons people choose CBA. So I guess that's all good and well, but so product attributes are really important to ING Direct. But it's not that easy. They had to get their options and their products in front of users because if we remember at the start, they weren't very well preferred. So let's see how customers actually were able to learn about the brand. And also remember in the search results, so the search terms and the sites visited, they weren't represented there either. So let's see what they're doing to win these customers and expose them to their product. So it's essentially when we started analysing the sites visited, we could see that it was comparison sites that helped ING Direct attract more consumer preferences. Again, example from savings account here around the final preference. And we've segmented the data by behaviour. So we've segmented the data based on people who used a comparison site in the blue and then compared that to everyone, regardless of whatever site they used in the red. And what becomes really clear is when consumers use a comparison site, they are much more likely to prefer ING Direct. So you can see the difference between using a comparison site in the blue is much higher than all users in the red there, choosing ING Direct as their final preference. There's also some other brands that do quite well, increasing their preferences after a comparison site is used. So Bankwest, UBank and ME Bank, particularly ME Bank there, more than doubling their final preferences when a comparison site's used. So let's go have a look at what's happening in this comparison site and what they are doing to really maximise this opportunity. So this is a screenshot of InfoChoice, which you'll remember from our search page was the most popular site visited. And we can see that ING Direct are really introducing more consumers to their offer with a strong presence on comparison sites. So they are reinforcing their brand through advertising, through paid advertising on the comparison site. So they've got banner ads, they've got sponsored links, and they've got a sponsored link at the top of the comparison table itself. So they're really not leaving anything to chance there. What's interesting when we look at the behaviour, I should mention that this is actually a click map diagram. So the green kind of areas on the page there and the yellow areas show where clicks occurred from customers who were using this site during the task. And the screen that I've just put up on the right-hand page there, or right-hand side there, shows the bottom of the page. And what we can see is there's far more clicks and interaction with the top of the page than the bottom of the page. And InfoChoice have about 10 to 12 sponsored listings. And so what this means is those that are sponsored at the top of the page are more likely to be seen and interacted with. I guess the bad news for all brand sites out there is not one person turned off the sponsored listings, which is a little option that they've got on the table here to check them off, and only one person clicked past the first page. So what this is really becoming, so not only do you have to fight for traffic and fight for preferences and attracting customers on Google or search engines, and you think that the race is kind of done, there's this other area. So InfoChoice is becoming kind of the next pseudo-Google, where you have to fight for your traffic and really promote yourself here against the other brands. And that's what ING Direct are doing really well, and it's resulting in a lot of preferences for them. So just before we go into the opportunity, the other interesting thing is the ME Bank, which actually, and RAMS, which had a higher interest rate than the ING Direct, didn't get as many preferences. So they're positioned right at the bottom of the sponsored listings, and as we saw, people didn't interact with them, so they didn't get those many preferences. So the opportunity here is to really have a strong consideration about increasing the prominence of your brand on comparison sites, particularly so for brands that are competing on product attributes rather than brand relationships. And even for brands that are relying on existing relationships, they should probably still aim to have a presence to stay on the consumer shortlist. So interestingly, when we look at CBA, they didn't appear until page 3, but as we can see, only one person potentially saw them. So already they're kind of getting forgotten about or lost at this stage of the journey as people get tempted away looking at other products and offers. Whereas if potentially they were on the first page, they might not have been lost and they could have been compared. So it's something to consider. So I just want to go back to the point that we raised right at the start of this section in Discover around only 51% will visit the initially preferred brand's website. So remember, after we saw those people who preferred the Big Four and they went through and didn't enter search terms and only half would visit them, how on earth do you stay in mind? How can you stay competitive when people aren't even coming back to your website? And one thing that we'd recommend that we consider is using dynamic remarketing tactics. It will help existing customers remember your brand. So this is something that's traditionally used, and a lot of brands we see already using it to attract prospects and to keep prospects in mind. However, it's a really good opportunity in this particular case for this particular behaviour to keep existing customers with existing preferences in mind. So just quickly, in a nutshell, it might be that a consumer visits your website to use internet banking, so we know they're an existing customer. We want to look out for hints at this stage. Then we want to tag that customer and what we know about them to remarket to, and then as they go along and visiting other websites, we display targeted relevant content. So how can we be really smart about this? What's the opportunity to really maximise the impact? So what we need to do is to identify when our existing customers are likely to need a new product by looking for these hints that I mentioned earlier when they visit your site. So if you know about their life stage, so for example they're turning 18, perhaps they might need a new car loan. Or we know the website that they visited before they arrived at your website. If it was domain.com.au, maybe they need a new mortgage. Or of course pages visited on your own site. So a savings calculator could mean a new savings account. So what could you overlay with what you know about current customers who are visiting products on your site versus prospect customers? So sort of separating them and marketing messages differently to them based on how they're engaged with your brand at the moment. So huge opportunity. That's just a couple of ideas. There's loads more you could do, tons more based on how your websites are set up and what you're able to capture. So another opportunity, of course, don't forget dynamic remarketing for prospective customers as well, and don't forget to use it within other channels, so internet banking, email and search engines. So that's all we've got for the Discover phase. Now I've got a few examples and opportunities to show you and consider, which is when someone lands on your website. So first of all, before we get started, let's step into the consumer mindset and understand how they actually want to use your website. So we ask them these questions before they get started, and what we've learned is that more than half, so 54%, actually want to complete their research and application online. So a huge opportunity to transfer and convert those customers who are not only researching but get them into the online application as well. Mortgages is the only exception there, where 30% want to research and apply online, but still a significantly high number, around a third of people. The most important website elements when they're deciding on a product, so the things that they're kind of going to beeline for and have a look at as they're trying to look for different products, so fees and charges, interest rates. Online banking was an interesting one, which I guess is pretty obvious if you're looking for a transaction account. It's almost a matter of fact, everyone has it. But if you're looking for a credit card or a savings account and it's not potentially connected to your current bank, people want to know that they can access online banking and what that looks like, because it's different to their current bank. Also making sure that the website's easy to understand and the features and benefits are clear. What's really interesting and kind of scary is that 15% will abandon the site if they have a problem completing the tasks. So that's wasted traffic instantly. So really important that we offer a easy-to-use website. The other options that they told us they would take, or avenues they would take if they experience problems completing tasks, is using help FAQs, picking up the phone. Online chat, really interesting, 17%. For the first time, it's on par with contact forms. So we've seen this increasing. We've seen the use of online chat or the preference if they have problems increasing over time, but it's for the first time it's been on par with contact forms. So we believe it will continue to trend upwards as more websites offer the service and as customers become more sophisticated using the product. So that gives you an idea of what people are thinking when they arrive at your website. Now I want to show you some typical charts from our DSE product there, and what I've got is a chart that shows the journey that people take on your website through Consider and Act, and the average scores per industry in there. So we're starting off with initial engagement, so how well do you engage those customers, how well do you show them the options that you have to offer, how can they evaluate the options on offer, how they make a decision to buy, the channel to buy through, and finally applying online. And I'll just see if I can, I've just got a problem with my animation here. Right, so the good news is most industries start and end the website journey really well. So really good at welcoming people in and letting them know, yep, you're the website for your needs. And interestingly, application online is actually the best performance, except for mortgages there. So starting and ending well, it's everything in the middle that's kind of falling apart, I suppose. So the bad news is the final stages before deciding to apply are kind of the weak points, which are really the tipping points to getting those people to decide on your product. And of course, mortgage providers not making it easy to apply online, and we saw 30% want to do so. So that's something to look at. We're not going to focus on that today. We're going to look at evaluating options and facilitating decisions. So looking at the next level down, same sort of chart showing the process across. The good news is most people provide, or most industries provide good comparison options, so that's the highest performing area in evaluating. The bad news is we're not matching products to needs more effectively. So it's almost like financial services are relying on the comparison table to do the matching needs for them instead of other content that could help customers along the way. And the rest of the bad news is really around the facilitating the decision to buy. So most are not offering any help to choose other brands or their brand over other brands. So by providing external comparison of other brands, or even just saying why choose this company at the point of decision making. So let's have a look at mortgages now, and I've got the subcategory of matching products to needs from our DSE product. I'm going to focus on the effectiveness of matching needs and the efficiency, which is basically a task that we give people to represent that task. So the bad news that we've got here is it's generally the poorest performing task across most of the financial service industry, regardless of product, but we're showing you mortgages here. Look, there's a few exceptions in mortgages, you can see. So St George are doing very well at effectiveness of matching needs and also the efficiency. When we look at the content, which is the actual features and functions you provide to help people match needs, it's kind of a mixed bag. There's some good performers and bad performers, but you can see St George are kind of doing well again. If you look at the red bar, Westpac are kind of falling behind there, and they're the two brands that I'll look at as examples as we go forward in a little bit more detail. So let's start off with Westpac, and what we can see is customers really kind of struggled to match needs at Westpac. The task that we gave them, which was similar across all of the websites benchmarked, was consumers were looking for a variable home loan for first home buyers with a 100% offset facility as well as a redraw feature. So what this is designed to represent is customers who arrive at a website and have already done a little bit of research, so they're not in that kind of exploring and learning stage. They've gone beyond that. They're now at the stage where they've got a few ideas of what they want and they're trying to match the product that you have to those particular needs. So the bad news, I suppose, here is most customers follow the pathway to learn about buying your first home. So great editorial content, nice hand-holding stuff, however not quite right for this particular stage of the journey, and few customers were able to translate this to a product to suit their needs. So you can see 75% actually took this journey, but only 33% achieved success. Another kind of bad point here is the pathway to products is quite buried across home loan pages. So 10% took the pathway to our home loan range, but 50% achieved success. So I guess the challenge here, and just some customer voice actually before we go into the challenge that backs this up. So we capture customer comments as well after they complete the task, and one customer said couldn't find anything about the 100% offset redraw feature, and the task was almost impossible. So some real, not only results that show that people can't find the product, but customer voice of frustration there as well. So what we could see is as people were flicking back and forth looking at different pages, they were kind of heading down this needs-based, hand-holding, editorial-based content, and they didn't kind of get their way back to the product suite. For those that actually found their way to product pages, they found it really hard to differentiate the products. So kind of the bad news here is customers have to work really hard to differentiate the difference between the products by flicking back and forth between product pages, reading through paragraphs of text, and flicking back and forth between tabs on each of those pages. So they're working quite hard. Too complicated, too much boring text was a couple of the comments that we got there. 60% couldn't find the most suitable product for their needs. So, you know, a poor result there in terms of being able to convert and get people to decide on a product. So in contrast, let's have a look at St George. We saw from that previous chart they did quite well. Let's break down what they did. So 86% of customers at St George could successfully match a correct product to their needs. So let's see how they went. A click map here shows the areas that they clicked on, and what we can see from this particular page is consumers are offered multiple pathways and methods to match products to needs, and they're clearly signposted from the landing page, so almost equally signposted rather than varied. So we've got a product-based pathway here, we've got a needs-based pathway in the left-hand side as well, we've got methods, so different ways that you can actually go about differentiating, we've got alternative channels, another way of displaying needs in a sentence format, and another way of displaying products by featuring specific products. So multiple journeys that are on offer, methods again in the main content area. So the interesting thing is consumers actually show us that they prefer to take that product-based journey when they've got product features in mind, and so that's kind of one of the main reasons why St George customers went so well. They started off on the right footing. So for those that went down the opportunity before we move on is to offer a combination of product-based and needs-based content and tools that are cross-linked so that customers can take a journey that suits their natural decision-making process. So rather than just assuming that everyone wants to follow editorial kind of based content or needs-based content, we should allow them to dive into products, particularly if they're further down the decision-making process and they just want to understand what products are available and they already know a little bit about the process and the home loans themselves. So moving on to the Choose a Home Loan page, which was the most popular pathway that people took, 100% of people who used this chooser tool successfully found the most suitable product. So this kind of chooser tool, it's above the products that are on offer, and what the good thing that's done here is all of the options in the chooser tool actually aim to isolate the differences between the products. So what this is essentially doing is it's St George that's doing the work for the customer. They're isolating differences, they're letting people choose a fast kind of needs-based way of what's important to them, and then they show them the results that are tailored to this. So rather than showing them the whole box and dice in a comparison table, for example, they're letting them say what's important to them and then showing them what's important in the results there. So it allows the customers to see what matters to them and take a more relevant, and it also can be more influential decision-making journey. So the other thing to think about when we consider that Westpac page where people are working really hard, flicking back and forth, is to offer consistent product pages to make comparison easier. So we can't assume that we've got a comparison table, so great, our comparison's done. Comparison tables are generally used when customers are differentiating between a suite of products, so 5 or 6 products, and then they build their shortlist on your website, and then what they tend to do is to go to product pages for more detail and flick back and forth. So we need to think about how we can make that consistent and easy to compare. And one thing that InfoChoice does really well is the product page content is the same across products. So if the product doesn't have a feature, it's still shown but it's greyed out. So it's really easy to learn what this product has and what this product doesn't have. And as you could see, flicking back to another page, it'd be easier to compare that in that same format rather than reading through lots and lots of paragraphs of text in different formats. So it's concise information as well, displayed under icons, under a clear hierarchy of headings in a table format, much easier to scan and find out what's important to you. So the opportunity, of course, is to not underestimate how important it is to use consistent, easy-to-scan product pages to facilitate easy comparisons between pages. Okay, the last opportunity, an area that I'll look at for this session, is in facilitating decisions in mortgages again, and I'm focusing on comparing with other companies. And what we can see here is it's quite a poor performance. Most of the industry doesn't provide comparison of competitors on their own website. And what's really amazing is that not many people actually remind the customer why they should choose this company at the point of decision making, which is on the product page. So let's have a look at a brand. Before we move on, you can see here that I think at Eubank in the kind of aqua bar there in the middle are doing quite well in comparing other companies, and also have got some good why choose this company performance as well. So let's see how that plays out. Data from the DME shows that Eubank were able to attract more customers to prefer their brand after quite a low initial recall. So only 4% could recall Eubank as a brand to use for mortgages, and 10% ended up preferring them. So a good improvement there. So let's break down their page and see what they're doing. So we've got a mark of trust, so backed by the NAB under a logo there. We've got the awards, so another reason to choose them. They've spelt it right out explicitly here. Why apply for a U home loan? So reasons to choose. Implicitly, they've built into their competitor comparison into their calculator, so you can compare other rates against the Eubank rate. So a really nice sticky piece of content. They're kind of doing the work for the customer here, and the customer might come back and use this calculator to compare other options that they find. Also got a comparison of competitors in the rates table, and ratings and reviews. So lots and lots of reasons to choose this bank. So it's really going beyond, you know, the typical why choose us list of bulleted points, and using a combination of implicit and explicit content and tools within your product pages is the other really important thing. So at that point of decision making, to give consumers reasons to choose your brand. So that's the last example that I have. So let's quickly, I'm sorry I've gone a little bit over time, so we'll quickly wrap up. A summary of the opportunities we've covered. So first of all is to consider those sponsored listings and promotions on comparison sites. Look at using remarketing strategies targeted at existing customers as well as prospects. Offering a variety of content and tools to help consumers find the most suitable product using their natural decision-making process. So that was that St. George example. Discover your consumers' needs and then tailor your website content for a more relevant journey. Provide scannable, consistent product pages to facilitate easy differentiation. And the last one there, use a variety of approaches to reinforce why to choose your brand. So there are opportunities. As usual, there's so much more to see, but I'm always out of time, so I'm sorry I won't get to cover many questions or anything. But just really quickly, I want to let you know what you saw today versus being a subscribing client with us. So today it was just a high-level industry overview. It was only a glimpse into the depth and breadth of the insight we provide. I won't read through all of this, but in a nutshell, you can get full research, including tailor analysis at a micro level that's relevant for your particular stage of development in your website, all the historical data, online portal access, lots workshops, etc. Lots of things you can get for being a subscribing client. And as a teaser, we also review mobile sites. So a couple of quick results there of our benchmarking for mobile sites. And I'll leave that with you to think about, but it's something that we also can do for you that we haven't covered off today. So that's where I think I'll leave it, and I'll hand back to Shay to wrap up. I'm not sure if we've got any time for questions or if we've had any, but I'll hand over to Shay to hand over.
No, thanks, Karen. I really appreciate that. I know it's a lot of content to try and get through in a very short space of time. Look, as Karen said, we're running a financial services program with quite a broad client base in that sector, as you saw up front. If you're interested in getting involved in the program and understanding how these unique insights can help you with your sales conversions and sales targets, by all means feel free to contact me. I'm happy to have a chat, and I guess we can explore where the fit might be. We will be sending through a copy of the recording of the presentation to all the attendees, so keep a lookout for that, and I'm sure you can distribute it to those in the business that you think need to be across us that maybe weren't able to attend. So on that note, we'll sign off, but just want to thank everybody, and thanks Karen for the effort. It's just the tip of the iceberg, and I know it's hard to sort of dive into the information as deep as we want to go. So we'll be signing off, and thanks for everyone's attendance.